Welcome to Charts from the Media. Today is November 3rd, 2013, and we are going to be looking at 4 charts from Oshkosh Corp, OSK. We will be taking an investor's view, not a day trader's view. Earnings were reported last week, and there was a 10% trading range. Earnings fell, and defense sales were down. We're going to take a look at 4 charts, including the weekly, daily, and the point and figure. Last week, Motley Fools put out an article, and they said it doesn't quite look like a buying opportunity. However, on Fast Money, they were talking about if it could hold the 100-day moving average for 3 days, it would be buyable. So let's take a look at the charts and see what they look like. The first is a weekly chart going back to the end of 2009. You will see the large drop that we had last week, so a very bearish candle last week. We are showing support right around the 45 level that goes back to 2010. We then have some support around 4250 level, and then we have congestion in the mid to high 30s. Looking down at the oscillators, the RSI had been recently in the overbought area, has come down, and stochastic has just recently crossed down from the overbought area. So the oscillators still indicate that more downside is likely. When we look at the daily chart, we see that that move last week broke down underneath the 50-day moving average. The 200-day moving average is right around a trend line, probably about that 4250 mark again. And here we'll see that congestion in the mid to high 30s. When we look at the oscillators, RSI has now just gotten down to that 29 level. It hasn't been here in at least a year and a half. And then if we look down to the slow stochastics, we have room to go before it gets to that oversold area. So both of these indicators say that there would be more room on the downside. We'll take a look at the Fibonacci retracement levels to see where it could possibly be going. That first retracement level at 38.2, it broke through there actually twice and then rebounded off. It has broken though, so the next area that we're going to be looking for is right about that 43.79 mark, and then again to the 41.50. So these would be the next Fibonacci retracement levels. When taking a look at the point and figure chart, the point and figure actually has a bullish price objective of $92, which is quite a ways from where it's at right now. We recently just had this large rise up. However, the zeros going down the opposite direction. If a few more zeros get plugged in, so if the price keeps on going down, you could see actually up here it would say high pole warning, which would mean that it's come down at least 50% of the rise up. So to recap, we just had a large move down, about 10% move last week. We are showing still bearish opportunities in the weekly and daily chart. If you're looking for a buy opportunity on the stock right now, it might be better to just wait till things settle down. It's trading on quite high volume. The days have very large ranges, so you may just want to wait till things settle down a little bit, where you have a little bit of a base to choose from, maybe when it gets to one of the levels that we looked at earlier. Thanks for watching. Visit Charts from the Media for definitions, learning tools, videos, and more.